Welcome, welcome, welcome. My name is Noble, and you're now tuned in to the most amazing, best technical analysis, most interactive, most handsome host of all shows that attempt to do what I'm about to do. Welcome to Insider Trading. Just having some fun. We got a lot to cover today. Got a lot to cover. I prepare for these. I got a little. So we got to talk about. We got to get clear on this recession. We got to get really clear on what's actually happening. Not conjecture, not what Noble thinks. Hardcore definitions, data, and charts. We gotta get clear on this. Because I keep hearing that we're not in a recession. It's like, what? We in a recession. But I'm gonna tell you why some people are arguing that we're not. We gotta talk about GDP real quick. Don't worry, this ain't gonna be no deep economic breakdown. Because that's gonna be, I know that's boring. You want to see the charts, you want to know how to make money, you want to know what should you be thinking about right now. All right. And then what happened this week. So we're gonna look at everything. We're gonna talk about Starbucks, Amazon, Meta. We're gonna talk about these layoffs. We're gonna talk about what happened if these layoffs roll over to manufacturing and retail. Ooh, I hope it doesn't. And I want to actually do y'all know I always like to go through the market, show you where the S&P is, because 80% of companies are tied to the S&P, right? You should know what a beta coefficient is. It's like the S&P moves at 100 miles per hour. If the stock's beta is 2, it's twice as fast, which means it can make you or lose you a lot more money, right? So that broad market index, or the S&P 500, way I teach it to my middle school kids. Matter of fact, speaking of kids, so I normally have my chain out. I normally had a chain out. I'm from Gary, Indiana. I'm sorry. I like gold. I do. I got multiple degrees in MBA. I can trade with the best of them. Been doing this for a minute. I like gold. I do. But I'm gonna tuck my chain in today. I just had an event with some kids, man. So I'm gonna rock something even more valuable. Even more valuable. It's my custom patented. It's really not patented. But you see what that says? S&P, SPY, S&P 500, world's largest ETF. All right. I'm gonna put this one on too. And what is this? Twitter. All right. We gotta talk about Twitter. It tells you what tech, what sector, technology. Just had an event with some kids. Shout out to Inga for having me to come through and teach these really, really amazing little brown geniuses about investing. I think I was supposed to do like 90 minutes. I had them kids in there for like 3 hours. I think it was longer than that. But it was amazing, man. I passed these out at the beginning to give them, I put it around their necks. I tell them to, tell me about who they are, their favorite something, their name, what company do they have, and then we kind of, I make them look up what's the current price. All right, so they're representing a stock or an ETF, right? And think of the S&P. Wrong one. Think of the S&P 500. It's like the all-star team, right? There's a lot of sports psychology that relates to trading. You're getting into a very, very, very technical field if you get into trading. But there's a lot of connections in terms of performance to how sports and athletes really have to perform at a high level to be a really great trader. Now, investing is honestly easy. It's not sexy to talk about just investing in the S&P. Better than S&P is NASDAQ over the last 20 years. Beats 99% of hedge fund managers that are managing your money. All right. But it's not sexy. So I get it. People want to pick their own stocks. I get it. But you're probably not amazing at it. You probably don't have an MBA. You probably don't love in-depth financials and going through balance sheets and like really understanding why a company is profitable and a good company in terms of the numbers. Most people don't have that skill set. All right. So, I just say that to say, stock picking has some risk. It does. It really does. But These are more valuable. So once again, I'm gonna tuck my chain in today. I'm gonna just rock these because the kids had them on all day. I love these. I got some fun stuff coming next year for kids too. Why don't we teach kids how to trade options in high school? They can get on TikTok and make the most complex little video, right? Why can't they? Should know. They should. So let me start here. Oh, let me say this real quick too. This is interactive. So wherever you are, you can type in. Let me know where you are. Where are you? For those watching, I'm streaming on like 7 multiple different platforms: LinkedIn, YouTube, Facebook. So I can't see all of my audience, and then a lot of people just watch this later because I really don't have like a set time that I always go live. So, yeah. But if you're watching live, let me know where you are, where you watching from. If there's a specific stock you want me to take a look at, I'll put a chart up. I'll do the analysis for you. Got a real live, true 20,000 hours, 13 years of my life, day trader, swing trader, investor that can trade anything at your service. So let me know. But let's do this. Let's hop over. I want to show you guys. Actually, I don't want to start with Chappelle. I want to start here real quick. Just for, foundational purposes. All right. What is a recession? What is it defined as? This has been such a crazy year. When people start saying this wasn't, and really I blame Biden. I have to. And I get why. I'm gonna tell you in a second why he's saying we're not in a recession. At first, I was like, what the hell is this? How are we not in a recession? How are we not in a recession? So what is recession? What is significant? We need a better word than significant. What does that mean? We need to be able to measure it. Widespread, prolonged downturn in economic activity. Okay, but how long is widespread and prolonged, right? It's not specific enough. So the normal definition, and I learned when I was in B school, undergrad at Indiana University, shout out to any of my Hoosiers, and that I learned and heard again when I was getting my MBA from Clark Atlanta. Shout out to my Panthers. Was 2 negative quarters of GDP. 2 negative quarters. 2 negative quarters of GDP. All right. What's GDP? It's gross domestic product. My guy Sean said, "What up, Noble? What's up, bro? How you doing, man? Glad you watching." What the heck is GDP? Real simple, is gross domestic product. The total that we produce as a country. Right? Everything that we produce, the manufacturing, the tech, like every sector, every industry, put it all together. How much do we produce? How much that we produce? The gross domestic product. All right. Think of America. If you y'all should make your kids watch these. You really should, because I break it down for kids. I teach kids. And I teach adults the same stuff on some level. Now, don't get me wrong. We talking options and futures. I go way, way, way deeper. But basics of investing, presentation I just did for these kids, I've literally done it in rooms mostly full of black folks. 35, 45, 25, 55. Just never got the basics. Right. So yeah, if you're watching this and you're a parent, you might, if you can get them to watch. I promise I'll keep stuff simple. So think of America as like a company, and a company produces products. All right. So how much do you sell your product for? All right. It's the value of what we produce as a company is what GDP is, right? So if we just bounce over to, data, numbers, right? I try to make everything in my show. Yeah, there's a personality to me, and I have opinions, of course, on all of this stuff. Yeah. But I want you guys to have facts. All right. Some of the trader shows that I, just kind of see here and there, it's just a lot of like personality and ego and like, I'm this guru who knows. And it's like, yeah, that's great. That's cool. But, you still should have fact-based opinions, right? You should be able to argue why you think something with some level of fact and insight, right? So GDP, what is GDP? It's right here. See these 2 quarters? These 2 quarters here, right? Both were negative. Clearly, I mean, you can see this is just percentage change from quarter to quarter. So clearly these are both, right? Percentages are under the zero line, so they're negative. But we didn't get 2 quarters that went consecutively lower. So that's the little, kind of little snafu, little trick in there. It's like, oh, well, no, we didn't get 2 consecutive quarters where it got worse. It's like, yeah, but it was still 2 bad quarters. Right. So I think we're in a recession. I think if you use the classic definition, we're in a recession. There's 2 negative quarters of GDP. Maybe not consecutively worse, right? So that second quarter in 2020 was a little bit better, right? It wasn't as bad as the quarter before it, but it was still negative, right? So I want y'all to know that we are in a recession. We are. Interesting. Let's just pop around some of the major news. This was interesting. As a lot of tech companies start to do some really big layoffs, which we're gonna talk about in a second. Starbucks. This was interesting. Starbucks yesterday, they had what's called Red Cup Day. And 100 of the unionized Starbucks decided to strike. So I don't know, but if you were at any of these Starbucks and you're like, man, what happened? And you didn't get the little red cup, you didn't get the normal red cup. You got this cup. I don't know if y'all can see it. This cup is holding, like, it's the Grinch's hand holding Starbucks employees union symbol. Right. So they've been trying to have some negotiations. If you know anything about union workers and companies, they're fighting it out for their rights and what they want. Right. 113 locations. Right. So that just means that it's even though Starbucks is this company that a lot of people love, it's about how you treat your employees. It matters. And they decided to strike on that specific day because it's a really big sales day. These people ain't playing, man. Companies have been getting over on people for so long. And I'm not saying Starbucks is a bad company. I don't invest in it. Matter of fact, let me give you a quick disclaimer. Everything I'm gonna give you today is just um uh education, entertainment. I don't have any of the series licenses, so that allows me to do what I'm doing and not have to worry about, somebody saying I can't do it. But this is for educational purposes. All right, education. I would tell you what I would do, sharing my perspective, but it's for educational purposes. Right. So it's gonna be interesting just as this recession, and I'm gonna show you where we are in the recession, and I'm gonna compare it exactly. I'm gonna show you exactly where we are in this recession compared to the 2008, because we're at a really, really critical place. We are, and I want to show you factually exactly where we are. If we had to overlay this recession with 2008, because you lived through that one. And you probably got some regrets. You probably wish you had invested heavily afterwards, or maybe even as it was dropping, or maybe you wish you understood options and you knew how to buy puts and short the market as it was coming down. There should have been a lesson you got from 2008, because we're repeating it right now. We literally are repeating it right now, but I want to show you better than tell you. All right. So, and the way these things happen, it's like we get a bad jobs report. And then we get a CPI report that's bad, right? And there's all these little micro things that start to just slowly, we had a lot of tech earnings recently. We were hoping every company was going to do well. Most of them didn't. Target collapsed. Meta has already been down, right? So some of the biggest, best companies that we've been loving for the last 10, 20 years, not looking good right now. All right, so I put up this post. I call this insider trading because myself and shout out to Joe Harrison, my partner in crime. Joe got me into trading. When was that? I had just got my MBA. I met Joe. This was what, 2009? Yeah, 2009. And he introduced me to futures and technical analysis. I was like, what the hell are futures? Changed my life. I became obsessed with futures. Paper traded for like a year. You talking to somebody with some real experience. Quit my 6-figure job. Ooh. And I was killing it at first. I was doing like a G 500 to 1,000 like every day. I was like, oh, this is the best thing ever. And then when I quit my job, a lot of the confidence left because then, as I go, if I can share some stories, because trust me, if you're that person watching and you're like, man, I really want to get into trading seriously, like as a craft, a career. Trust me, I've done it, and I made some mistakes, some bad decisions, some good decisions, but I survived. I'm here, right? And I love what I do. So, the recession of '08 was interesting because it's matching up once again with what we're seeing now. Let me pop this back up real quick. We're starting to get a lot of layoffs. All right. Now we don't have banks failing because right, the core of what's happening now is different than right. So the root cause is different. But I put this post up in Insider Trading, which is actually our group on Facebook. So if you're watching, you're not in Insider Trading, it's a group on Facebook. It's the best group, hands down. Trust me. We protect you from the scammers. We don't let random people post all kind of crazy stuff. It's an amazing group of people who are learning, watching on the sidelines, actually trading. You know, some people at all different levels. 30,000 people. Best information you're gonna get for free. Right. And me and Joe do these lives. We used to do it more consistently, but you know, ebbs and flows, right? So tech layoffs are in full effect. Meta, Facebook, 11,000. Twitter. Um, we gonna come back to Twitter. Snapchat just laid off 20% of their workforce. That's 6,000 people. Salesforce, the company Salesforce, right? 2,100 people. Lyft, 13% of its workforce. Stripe laid off 14%. I love Stripe. I really do. I love Stripe. So much more than PayPal. I really don't like PayPal for some personal reasons. But anyway, Microsoft laid off 1,000. Amazon just announced, I think it was this week, that they're going to lay off 10,000. Their Alexa group. Think about it. The people who are, you know, folks, and don't get me wrong, Alexa's dope. It's cool. But when recessions hit and money starts to matter, all these like luxury tech things just don't matter as much to us as consumers. They don't. Now, don't get me wrong. You got a certain level, a group, certain segment of you know, America, upper middle class, who, yes, even during recessions, are going to do well, know how to take advantage of the market and make more when recessions happen, right? But most people during the recession get hit worse, right? Shopify, 10%. Matter of fact, let me go to this other site that I found, because this is the one, right? So check this out. It's just a long list. Intelligence site I found. Amazon, Twitter. I'm gonna just read through the names of companies laying off people right now in thousands, numbers of thousands, right? Go to group. C.H. Robinson laid off 1,000. Whisper laid off 1,000. Semaphore 500. Vive 30% of their employees, only 100, but still, it's 30%. Right? Offer Up 19%. E-commerce, own back 17%. Technology, Meta 11,000. Technology, as you know. Mythical Games 10%. Gaming technology, Unacademy 10% of its workforce. Beat 600. Ride hailing, right? So it's kind of like similar to Uber, I think. Yeah, competitor Uber. Schaeffler 1,300. Dixie Group 20%. Amazon, we talked about. What is this? Rubis. I might be pronouncing it wrong. Anyway, you can see it on the screen. Healthcare, 82%. 82%. All right. And the list goes on and on. And this is just October, November. And this is a very, very, very long list. We only hear about the big major companies. That's all you really know about. All right. You hear about Meta, you hear about Twitter, right? Maybe you heard about Stripe, Snapchat. That's what gets, you know, circulated in the news. But there's a lot of companies right now who are cutting back, trying to fight inflation, trying to figure out how to. All right. And as a business owner, I hate to tell y'all, but one of the biggest expenses is your salary. If you work a 9 to 5, it is. Now, I'm not saying that these cutoffs are the right thing to do. I remember I had a conversation with a guy. I don't even remember how we met. Amazing speaker, had done really well in corporate. We had a conversation, man. This was probably like 10, no, maybe like 8 years ago. And he kind of told me, you know, we were just talking. He was like sharing his philosophy around how companies can really manage better through these times. Right. And it comes from, and he had this whole model for it, just an amazing business minded, very human, though. He was a believer, he's a Christian. And I think that kind of core to him is why he approached business and literally what he kind of, I think, taught companies now that he was like post corporate was how to manage through times like this. Right. And it was amazing just because, you know, it's kind of like fat. Where's the fat? In my body, if I want to lose 20 pounds, I don't just say, damn, my arm is 20 pounds. Let me chop my arm off. No, you find right? You slowly reduce by eating healthier, more movement, right? And he had this kind of whole metaphor, which makes perfect sense, right? Even when you think about your body, you can't say, man, I'm gonna lose all this weight off my tummy. You can't target your tummy. Yeah, you can do 1,000 sit-ups, you can do 1,000,000 push-ups. You can't target and tell the fat here to just go away, but the fat everywhere else stays, right? And it's similar kind of if you think about how companies do. All right. They look at it and say, man, what's the segment, the product, segment, business segment that is just how do we get rid of 20 pounds? And they're like, okay, Alexa team, yep, some of y'all got to go. Right. So I do think there's a whole there's a question about how these layoffs and cuts are made. And companies know that these cycles happen, right? So it's like, how do you take the value of those people and place it in other areas of the company that still you can derive some value from these people versus these huge major layoffs? I feel for you if you're going through the layoff or have one coming, because you might. So you might want to get like good 6 months of savings if you don't already have it. That's what I've been telling everybody. And that should be on your checklist anyway, but So this is a pretty interesting article. End of Silicon Valley's 20-year boom. And if you think about it, what if this kind of is like a tech bubble for the last 20 years? We've been amazingly excited about tech. And think about it. End of .com boom was around 2000. That was when 2000 was coming. We were scared computers was going to shut down, the world was going to crash. Right? All that stuff that didn't happen. And since then, the Amazons, the Yahoos of the world, they've revolutionized how we do everything. Tech has taken over everything. It's been the biggest, best sector. That's why NASDAQ has outperformed the S&P. Because 54% of the stocks of the 102 in NASDAQ, think of an all-star team, just the biggest 102 of the best stocks in the world. All right, like 54% are fintech, financial tech companies. All right, so tech really runs the world. But what we're seeing right now with these layoffs, and if I pulled up, which I am going to pull up, I'm going to pull up Netflix, I'm going to pull up Apple, I'm going to pull up the XL, it's a XLK, which is like the, it's essentially the like tech sector companies that are like from the S&P. I want to pull that up too. Index, you should know. Probably the only thing, honestly, that can really compete with NASDAQ. I got to mention XLK. I do. I got to. So yeah, it's just an interesting article. Google it. You can see the title, right? The End of Silicon Valley's 20-year boom. Even when I saw it, I was like, dang, could this really be like, no, like we can't, like, could this really be like the end of this 20-year run? Like, what if 10 years from now, it's not tech that's leading the world? It's hard to really picture. It really is hard to picture because we have technology in everything now. Right. And we're constantly innovating to get more of your attention, your time, your money. Right? That's how the world works to make, and the good products and services to make things convenient. But a lot of these tech companies are laying off because of advertising. Companies are cutting back. Right. So think about a Netflix, think about a Facebook. Most of their money comes from what? Netflix subscriptions. But, we're talking about Facebook advertising. I advertise on Facebook as a business owner when I'm running a new campaign, new class, right? So it's really, really interesting just where we are. I'm gonna keep moving across my little list here. So Amazon, as I talked about a little earlier, laying off hits Alexa unit in the cloud gaming division. Cloud gaming, right? Why those two areas? Twitter, Elon Musk. Regardless of what you think, I know he's a pretty polarizing type dude. We've had some interesting debate in insider trading this week. Right? Not just posted, no, we're thinking in the room. People are having great conversation, right? So once again, if you're brand new, you're just watching the channel, watching the show. Insider Trading is an actual group on Facebook, managed by myself and my cousin, Joel Harrison. Best trader I know, hands down. Plus, he's the only one who I know is actually making money. The only person I know. If I don't come to your house and see you make some money, I have no idea what you're doing. I don't trust anybody. I really don't. This is like the shadiest industry of all industries. It really is. So shout out to Joel. But yeah, we were having some conversation this week about Elon Musk. Just his ability to really lead. Is he truly an inventor? A lot of different things came up, but I think what he's done recently, for those that don't know, he sent out an email a few days ago and said, "Hey, I need to know if you're ready to get hardcore for Twitter." And a lot of people, and then it was basically a low key threat. He said, if you don't check yes in whatever this box was or link on the email, if you don't click yes to you're ready to go hardcore for Twitter, we're gonna send you 3 months of severance. You're done. I said, "Oh, Elon, I get it. I get it. But I don't know if that's good leadership." Nah, I can't say that. I can't say that that's what I would do. I think there's some other ways. I think there's some other approaches to still be aggressive, to still create a culture that's about winning and competing at a high level. Right. Because then what happened is, a lot of people left. Right. And then I read an article even early this morning. I was talking about how he needed some of the people that he just fired and let go to come back to actually help break down some of the engineering stacks, some of like the back end technology. I'm like, it's just messy. It's getting messy. It's getting real messy. Shout out to Dave Chappelle real quick. I know this. You're like, how the heck you go to Dave Chappelle? This has nothing to do with Dave Chappelle. No, it does. It does. It's a little small link. You know what the link is to me? Dave Chappelle, if you just saw his any of his specials recently, but specifically this last one, the monologue he did for SNL, touchy, controversial-ish, if you will. But I love comedians, man, because they figure out ways to be really, really honest. And their job is different, right? To make people laugh and to kind of it's different than being a CEO, clearly. But I've always said the most honest person in the room and how you treat people and how you approach these really tough conversations about how do we survive through a recession that is probably going to get worse. Right. This is where like character matters. It really does. So I love Chappelle, man, and I think of people like him who really are genius and brilliant in how they approach incredibly tough subjects and how to navigate them. But that's what business leaders have to do too. Right. And how you lead, how you do it matters deeply, especially to the thousands of people who you just changed their lives, right? Because of a number. So that's my my slant on that. So let's do this. Let's jump to the charts. Let's jump to the charts. So I want to show y'all some stuff. I got to show y'all some stuff. I do. Always got to show you something. Let me just pull it up. Okay. And then let me look at my list. Oh, so yeah. So let's start here. Let's start here. Real simple and easy. I'm gonna keep this super simple. Actually, I'm gonna make these candles green so you can see them a little bit better. Green and red. What the heck is green and red? If you've never seen a candlestick chart, you've never seen the chart, don't get intimidated. I literally could teach this to fifth graders, and I have. Like 10 years ago when I first started Limitless, which is the name of my brand, right? My investing classes, Limitless Options for Income, Limitless Futures. I just put Limitless in front of it, in front of everything. Red means down. Green means up. Price went up. These are month charts. Every single one of these candles shows you a month. All right, so check this out. This really, really big uptrend right here. Prices were just going higher and higher and higher and higher. This was the dot-com bubble. This was literally 95 all the way to 2000. Right? An amazing time to be in the market, investing, buying, building some equity, and being able to make some money. All right. Oh, I got a question. It says, what's the best strategy to get trades in time ranges of 30 days each or more? Let me think about that for a second. What's the best strategy to get trades in time ranges of 30 days each or more? It's worded a little weird for me. So I'm gonna throw the question back and say, are you saying if you want to have trades that last about 30 days, you want to give it that type of time? And then are we talking about, I assume we're talking about options. Are we talking about options trades that go about 30 days out? That's actually really good that you asked about 30 days because if I go to the VIX, do I have a VIX on here? No, I don't have a VIX on here. So stick around for a second. I'm gonna hit the VIX. I added that to my list. The VIX will help you to kind of get a bit more accuracy around like the right timing, but the right timing based on the right price, based on really what probably millions of investors are doing. So if you really understand what the VIX is, the VIX can help you with that, right? It's key. Gotta understand the VIX. I can't see whose face this is, but somebody said, "Yo, Noble Woods, yo, what's up?" I don't know who it is. I can't see your face. But what's up? So let me just go back here for a second. So, really quick and easy, right? This uptrend here, .com bubble, all right? .com bubble. And so if I just, super basics, look at that trend line. That's all it is. It's a line that a kid could draw on the chart, connecting this low, and really, I'll just do it perfectly. Connecting this low here and this low here, all right? So the concept is super simple. When we break a trend line, we're probably changing trend direction. Did we change trend direction? Yeah. We went into a very strong downtrend. This was the bubble bursting, right? So for me, for Noble, and for you, you really should adopt this definition. If we're pulling up month charts for my people who understand technical analysis, the worst stuff happens. The worst things happen, or the recessions, the crashes, well, really the recessions. All they truly are downtrends on the month chart, which we don't get a lot of, right? We just don't get a lot of. So once again, all right, 5 years, and this yellow line here is a 20-period moving average. Statistically, it's just like, it's literally it's like half court. It's half court. It's on a football field, it's the 50-yard line, right? When you're closer, depending on which side of the 50 you're on, one team has a higher chance of winning. It's the same thing here. Exact same concept, right? Simple sports analogy there. Everybody understands. You know what it means when your little, your kid, who can barely dribble, but he gets on the right side of the court, right? He crosses, half court, and then he gets inside the perimeter, right? Inside the three, inside the right. The closer he gets to the rim, the better, right? So that line matters. That line statistically, mathematically, same exact thing on the chart is this yellow line, right? So right in here, right, this whole move down is a strong downtrend, very clear. And then what happened? Then we had what? 4 more years of another uptrend, right? And then right here, we had another downtrend, but this was the recession of 08, right? Recession of 08. And I hate to show you this because some of y'all just, man, I know this be making some people just ache. But after we came back, after this recession, right, around 2010, when we got back above the 20, real simple kind of, I'm giving you like one-on-one analysis. Matter of fact, this ain't even one-on-one to me. This is like under one-on-one. All right, this is like the entry level to the entry level of technical analysis, right? But it's helpful stuff, right? We basically went from that downtrend, which lasted, roughly 2 years, right? And then we pretty much went from 2010 to 2022. You had 12 years of what's called bullish activity, buying, believing in companies, investing, right? Building equity. All right. So unfortunately, especially for a lot of Black folks, some of us really just start paying attention in 2020 here, COVID. Right. And that's cool. Right? Because if I literally show you this trend line, well, okay, cool. That was super steep. All right. So this 2 years was factually, the last 2 years from COVID to the highs in November, December were probably the steepest, best time to be investing, easiest money in literally like the last 30, 40 years. All right. And people are hurt right now because this year was a very smooth, methodical break in trend. We're now in a downtrend on these month charts. We're under this 20. All right. And I just want you to pay attention to one little thing down here. Just one little thing down here. How many bars do you see? This little right down here. Even though you don't know what this is, how many bars do you see? You see 3. Put a number. You see 3. I go back to the recession, right? When we had 3 bars, we were right here. Right? We were right here. So where's the candle? It's right here. A little bit under the 20, but kind of in this little range here. All right. So we had pushed under the 20. We really hadn't, right? We hadn't experienced the strongest worst part yet. And if I come to where we are now, we're pretty much in the exact same spot. All right. We're here ranging a little bit under the 20. So the next few months, as we go into 23, I'm just telling you now, it can get a lot worse. It probably will, based on the things that we're seeing, right? But it's possible that the market could rebound. It's definitely possible. But if we don't get above that 20, you don't get above 4,200. It's just simple math. Simple math. Repeatable patterns. You want to know what's going to happen? Study every recession that's ever happened. All right. Now, I'm talking to people like me. I'm talking to like the serious traders, right? Or the people who are new. No, you got to get this stuff on the weekend and just to kind of dive in, right? So let me kind of bounce around for a second. Let's look at so this year we're down. How much are we down this year? This is SPX, so you're actually looking at the S&P 500 index. From that high, we dropped about what? Yeah, 28%. I always say 30, but I'm just rounding up. So 28%. I'll show you guys Starbucks. I was talking about Starbucks earlier. Starbucks has all right, look at that. Went under the 20. Got some red bars down here. Was able to get back up. So it's right now we're testing the 20. Testing the 20. What does that mean? It means it's just a critical area that investors, smart and savvy investors and traders are watching. If we can't get above this and stay above it though, all right, we're already in a downtrend. So just because we're up, just because price is here, does not mean it can't go lower. All right. And from those highs, looks like Starbucks dropped about 45%. And from those lows, we're up about 40%. Right? Up about 40% off those lows. Starbucks. Meta. I don't even want to show y'all Meta. I really don't. I'll show you though. And I say I don't want to show you just because it's ugly. It's just Facebook. Facebook is Meta. For those that are like, what does he mean, Meta? New name for Facebook. Facebook from its highs are down 77%. Let's just say 80%. Lows of COVID were back here. This was COVID, that really bad month. All right. So we've effectively gone under, right? We're actually lower now than COVID's low. And that's what I'm, for lack of better terms, worried about with pretty much every other stock we're looking at. And really the broad market. Because there's some patterns that dot-com bubble up burst I showed you and the recession of 2008, they both were about 50% drops from the high. Where's a 50% drop from the high on the S&P? It's pretty much the COVID low. Again, went back to the COVID low. And so if I was to draw that line and literally just drag it down to see, wrong tool. Drag it down and see where, if we were to repeat, right? Last two major downtrends, they both dropped like 50%. Where's 50%? 50% is right there. What's right there? Oh, that's the COVID low. Right. It's right back to the same area. So essentially all the value of these last 2 years, it would be a complete reset. All right. Complete reset. Kind of like a shakeout. Fuzzy term for traders, just that means you get in a trade, it's up, you're up 100%. You're like, go, go, go. This is amazing. You're up 200%. And then out of nowhere, price turns around and comes all the way down perfectly to where you got in. And then it probably is going to go back up again. So if you don't recognize the patterns, know what to do, have some some mental skills to be able to handle making money and then seeing it come out the market. If that were to happen here on these month charts, that happens all the time on the smaller time frames. Right? You just don't see these patterns in the macro. All right, we had 12 years of uptrend. That was 12 years. And then we got 2 years of the steepest uptrend in the last like 30 years. So it's like, y'all, we can't have perfect conditions all the time. Right? Like we have to go into these. They're just cycles. They happen, they really do. Let me see. So let me show y'all Netflix real quick. Man, my heart to see Netflix get beat up like this. Oh, I had some student's name on the chart because we was doing some work. I got a 8-week live option class that I'm doing right now that I'm thinking about dropping a Black Friday special on, which means I would have to do it like real soon. Powerful class, really, really powerful class. Easily over 60 hours of content. I was arguably, of course, I'm gonna say this, but arguably the best options class you can take. I pay attention to everything that's out, and I love what I do, but I see a lot of students, a lot of people who just, have, and it's a part of life. You take classes, you're trying to learn, but you really need somebody with this who understands business. I got an MBA, who understands probability. I love statistics, right? And who really has the experience, the character, and can go deep with you. Deep. You need way beyond basics. All this stuff I'm talking about in these lives, my students get 10 times more information than this. I can't give it to you in a live. All right. So those classes and stuff you see on YouTube, even from me, it's not my best stuff, right? You get the best from educators and experts, right? In a really in the right format, which generally is a class or something designed to give you depth and mastery. You can't get that from watching YouTube. Right. Even mine, you can't get it. Right. Netflix down 77%. Oof. COVID low was back here. All right, COVID low was right there. So yeah, we'll bounce around a little bit more. Amazon, let's take a quick look at Amazon. Very strong channel. Real simple stuff. It's a channel. All right, this is the week chart. What do you notice? These highs and lows, they're staying perfectly inside of these two lines, which are two trend lines, basically. A certain distance, equal distance, like two parallel lines, showing you the downtrend. All right. So where's the money made? Smart traders, right here. Right here. All right. Because you could have drawn and had this trend line on your chart way back here. That should have been on your chart since April. So when we got here 4 months later in August, you would have saw, oh, we're in a downtrend. We're inside of a channel. All right. We're just kind of dancing over this 20. We danced over the 20. We dropped. We got over the 20. We dropped. We're still in a downtrend. All right. We never closed effectively above this. All right. And got a continuation of price buying. We never changed this pattern. All right. So even if here you didn't get in, okay, cool. All right. We could talk about entries and get all sophisticated. But somewhere in here, shoot, here. For my students, y'all know when we cross back under, I ain't gonna even say it, but when we got that reversal, or at least this 20s test right here, somewhere in here, ride this thing back down and make some money. Right. So it's been a very clean year. Like this hasn't, I hate to say, but it's been a very logical, very clean, systematic 101 type of year. It's just a downtrend. And people aren't used to seeing downtrends. It's been a very simple year. It really has. But you have to get into this. Like you gotta sacrifice some time. You have to. These patterns matter so much, and they're nothing I've showed you today is like over your head hard and like complex. It may take you a while to kind of adjust, but it's just new. Right. So as soon as you start talking to people like me about trading, right, we're talking about hundreds of hours. for something that's going to change your life and your family's life, for potentially for generations. All right. So, you know, I'm having those hard conversations in the console. I'm like, how much Netflix did you binge this week? Because if you're watching more Netflix than hours you put in this, you're not serious. You playing around. I want to deal with the people that are serious. That's going to put in the time and understand the sacrifice. Because they're sacrifices. You're not going to get this easy. Nobody's going to give it to you. You could watch me day trade literally you could come to my house and watch me trade for 100 hours. You still couldn't do it after watching me do it. That didn't transfer the skills, the instinct, the gut reaction of some of this stuff that I know that I consciously I'm not even aware of, that I know because I've just seen it and I've done it for thousands of hours of my life. Right. And I had to go through it too. I remember it took me like 3 months just to figure out how the hell to short a stock. It just didn't make sense. I'm like, how am I selling something that I borrowed? I'm borrowing a share from the market, but then I'm buying it back lower and I'm making money when the price comes. Like, it literally just, I couldn't accept it. I couldn't accept that. Yes, in the market, whatever works in this video game we've created, whatever works in this video game works. Same way like in Street Fighter, you can throw a fireball at somebody. You can't throw a fireball at somebody in real life. Yeah, but in that world, you can. And we call a PlayStation a platform. And I'm showing y'all Thinkorswim, which is a platform. Whatever works inside this world works. It don't have to make sense to you. You just got to study it, right? And learn to apply it for your life. This really is like, this is it. This is like the money industry. I hate that we call it the financial industry. We should call it the rich industry or the wealthy. Like, if we change the name, more people, more kids would gravitate. Oh, you want to be in finance? Let's talk about financial literacy. Nobody, like, it's just, we need to reinvent all of this stuff. We really do. Or at least the branding of it, you know? Let's see what else I got. Oh, let me take a quick look at Target. Show y'all Target. Good old Target, man. Target. Look at Target this year. Look at Target this year. Got a little bit above the 20. Look at this drop here. Must have been a bad earnings. Still under the 20. It's kind of range and dancing. I'm just giving you one indicator. This 20. Just one little indicator. One little indicator today. I want to keep it real simple. All right. What happened last time? We got above it. Came back under. Beginning of the year, we were above it. Came right back under. All right. Right now, we're above it. But Target's had some, right. And if you really look at it, it's like this candle right here. Right. Target still hasn't recovered from this really, really, really bad week, which was May 16th. All right. We're pretty much just now kind of stuck inside of it. All right. So they need a catalyst. The whole market needs a true catalyst to go higher. We do. We need some good news, is what I'm saying. we're getting worse news. The tech industry, biggest, best companies not meeting their earnings. The investors not liking it, right? Right, job reports coming out, CPI, all these right. We're constantly getting new information, but it's doesn't seem to be getting better. So we are bearish right now, and that could change. Let me not be like the preacher of gloom and doom. Could we, by the end of December, could we be looking a lot better and healthier? Yeah, it's definitely possible. It is. We just need some catalysts. We need reasons. Think about it. Why do you buy anything? Because there's a reason. But with investing, it's more than just, oh, I like the company. No, you want to buy because there's a valid reason that makes this a smart investment or trade. And trading is really about the trend direction. So, man, unless we talking about some, a year out calls, 2 years out, you buying calls on Apple. For those who don't understand trader options lingo, a call, think of a call as like with at an auction, because that's really what the stock market is. In this huge auction, if I call out the price, Actually, well, think of it like this. If we're in an auction and I write down the price that I want to sell something for, I put my price down, it's a put. So you hear these classic terms, calls and puts. In an auction, which is what the stock market is, right? Exchange of buyers and sellers. If I put my price down, by definition, I'm selling something. If I write on my little, thing, my little paddle 500, because I want to buy it, I call out what I want to buy it, then I'm buying. Right. So calls, right? What I just said was some people right now are eyeballing Amazon, Facebook, Netflix, and they're looking at these as discounts. They're like, yo, Netflix is down 77%. I want to buy calls 2 years out because I'm going to give this time to recover. Right. And that's what options is all about. Probability. It's all about probability. The further out you go, the more expensive, because there's a higher chance that price will go your direction in a year versus if you buy a week out contract. How good you got to be to predict this stuff? Weeks, months, a couple hours. You got to really know what you're doing, right? So got to put the time in. Have to. Amazing craft. I love what I do. I love showing you guys what all this stuff is. I got to hit volume profile. That's what I'm supposed to be teaching. Okay, cool. Let me hit one last thing. Let me hit the VIX real quick for that person who asked me about. Now this chart is gonna have a lot on it. I ain't gonna lie. Blah, blah, blah. Actually, this is going to be even more confusing, but I got to do it, and I'll clean it up, and I'll make it make sense. But let me first do this real quick. Okay, and that's probably as best I can. Let me see if I can zoom in a little bit more. Dang, no, it won't let me do it. So what I'm doing right now is I'm comparing. Oh, wait, hold on. I want to try to, let me see. Okay, that's probably as best as I can make it. So this is the VIX compared to the S&P. All right, so let me show you which one is the VIX. The one in red down here is the VIX. Up here, the SPX, this is the S&P. All right, so they have an inverse relationship, which generally means the VIX is what's called the volatility index. It's also called the fear gauge. Fear, because when things get really, really volatile and crazy, and let me go back and show you the last time they got really crazy. Right here, this really huge spike. All right, this is when the S&P dropped. You can see the blue candles right here, right? We dropped really hard on the S&P during COVID. You lived through this. The VIX went incredibly high. All right, so what does that mean? What does that mean? The VIX is essentially saying we're measuring S&P, specifically S&P options contracts, 16 and 44 days out. Right? Why does that matter? Because wealthy, rich, or becoming wealthy and rich, just smart, savvy traders, right? When things get really, really unpredictable, and there's something that happens like this pandemic, and they're talking about shutting down cities and we can't go outside. What? It might be worse than it, right? And all of that uncertainty creates fear. How do you protect yourself in a market that's down? The only way you can protect yourself in a market that's down, right? Only way you can protect your long-term money is either sell all of those shares and get out all of these amazing investments. No, probably don't want to do that. You want to be savvy enough to actually know how to make money on the down as well. Right? A great way to do that is you got to get into options. Got to get into options. You talking buying shares, pennies on a dollar. That's all it really is. It's wholesale. It's like buying wholesale. It's wholesale buying, right? So when the VIX spikes, it's called the fear gauge because it's literally showing you a really high number of people who now are placing bets on options contracts based on what they expect because they don't know when there's uncertainty. So when the VIX goes up really high, the market gets more volatile. And it's the only math I'm gonna give you to keep it simple. It's a factor of 16. So if the VIX is at 32, 32 divided by 16 is 2. That basically means now we're kind of getting like 2% volatility. So you might have like the days kind of get more volatile. Each day, the range from high to low on the S&P It's just a bit more wild. All right. And if we jump up to 48, 48 divided by 16 is 3. Now we can have like 3% days where we're up or down like 3%, right? So the range gets bigger. It's more volatile. It's just prices going up and down harder, faster, which makes it great if you know how to trade. But if you don't, volatility it'll end you. It really will. It'll hurt. Right. So the point here is this is an inverse relationship, right? So if I literally, I'm gonna just do one of these during an uptrend. Look at this. This little I'm gonna use this one. No, let me see. Yeah, let's use this one. No, let's use this one. I'll use this one. This little dip right here. It's a little dip when we were in an uptrend, S&P. When the S&P came down for these like 4 or 5 weeks, right? The VIX spiked. The VIX popped up. Right. So usually if you you can literally just read the VIX and it's inverse. When the VIX goes high, it's telling you, right? It's telling you what the broad market is thinking. It's telling you how investors feel. It's a gauge of fear. We fear uncertainty. When something happens that we're not really clear on, the VIX goes higher. So in these really smooth, right? Really smooth uptrends, I mean, you really just want to align your options trades that are like 30 days out with the VIX. Because it's telling you and it's measuring, it's measuring what the market thinks about the future anyway. 16 and 44 days. What's in between 16 and 44? 30 something. All right. So that question earlier, you got to dig into the VIX. The VIX is going to help you to it's going to help with your overall analysis, period. Right. Regardless of what the stock is doing. Right. And regardless of what stock. Right. So it's here. Right. It's here. The VIX is like a huge help because you need to understand volatility. Right. Okay. Let me do this. I didn't mean to put that circle. I really did. Hop over here for a second. We'll go to futures real quick. Real quick. Actually, I'm gonna go. Trying to think, which one do I want to do? Okay, so I got a lot on this chart. I'm going to move some stuff around. And I'm gonna get rid of all these trend lines. Okay, so this is S&P yesterday. I just want to, because I know some folks who watch me know I can clearly break down long-term investing, options. We could talk options all day. We could talk futures too. It's really all the same to me, right? And it's definitely different. There's different nuances. Futures and options are just leverage. That's all it really is. It's leverage. If you can afford to hit the button on one ES contract, matter of fact, I'll do the math. Where's the ES right now? ES is at a 39.65. On Thinkorswim, if you traded one contract, the margin requirement, how much money do you need to even hit the button? You need $14,300. It's at 36.95. So what's the multiple? Options, one contract gives you 100 shares. Essentially, you're kind of borrowing 100 shares. You have the buying power of 100 shares, even though you didn't actually pay for 100 shares. You got 100 shares, dirt cheap. You paid pennies per dollar, right? That's why options are so amazing, because the math is just like, how can you not be trading options? It's the math. People think crypto is so amazing. I'm like, yeah, you hybrid. It's a lot of people hibernating right now. It's a lot of crypto people getting beat up thinking that crypto had the most amazing percentage returns you can ever get. It's like, have you not heard of options? Like you know you can make thousands of percent return in options too. All right, like you can't beat the math. You got to understand what options really is. The math is like ninth wonder of the world math. It's amazing, but we don't like math. That's a whole nother topic. So right now we at 36.95. What's the leverage? It's a leverage of 50. What does that mean? That means if you can push the button and trade one of these contracts, it's essentially as if you're trading 36.95 times 50. That's $184,750 with one contract. That's why you make money faster, because it's leverage. Right? It's leverage. They're letting the small people play like the big people. They're letting the small guy play like the rich guy, so the small guy can become the rich guy. Right? That's all it is. Futures, foreign exchange options. There's leverage in each market. It's not dollar to dollar. If you buy, it's literally, it's not dollar to dollar. For every dollar you put into futures, foreign exchange, and options, you're getting way more buying power, which means you can make or lose it faster. All right. So I just want to show y'all today. Actually, I'll show you today too. Maybe I won't. I think yesterday was a more fun kind of day. And I got a futures. I mean, I'm clearly gonna tell y'all about my classes because I legitimately do think they're the best out. I really do. I do, and it's taken me 13 years to get here, right? So I've truly mastered technical analysis. All right, all the indicators people know, I know all of them, all of them. But what's key is how do they work under the surface? You can give a 16-year-old a car and say, "Yo, don't hit anybody. Turn the steering wheel, brake, accelerator, drive, park." That's it. But that's not mastery. Right? Too many of us get into trading and we think that that's mastery. That's not mastery. Right? You got to understand what's under the hood. You got to really understand the system and why, right, a car works how it works to truly pull something from it. All right. So, just want to encourage you, if you're watching this, because clearly you care about trading or you are trading or you want to get into trading. Yeah, you have to put some time in. Right. And people like me just help accelerate your process. That's all. That's all. You learn a lot from the right educators really fast. We're just trying to accelerate your timeline and really give you some of the hard lessons I had to learn from trading the hard way. That's all it is. So I'm gonna give y'all some stuff, more than I usually give. This indicator down here is really, really amazing. It's based on statistics. Bollinger Bands and Keltner channels. It's called a TTM squeeze. It's really popular. I don't even use the Squeeze Pro. I don't need to. I don't technically even need the squeeze, but I do. I like it. It's pretty powerful. All right. So all these little red dots down here just pretty much mean we don't have any gas. We don't have volatility. We're going to range. High probability of ranging. All right. That started at 9:35. So as soon as I saw that yesterday, I was like, oh, I'm probably not gonna have a trade for a couple hours. All right. Years in this game. Already knew. Why? Because we don't get one red dot and go back. Like usually once that volatility slows down and markets get really tight, now patience kicks in. Can you want to make money, but for 2 hours, 2.5 hours, do nothing because there's a little red dot on your screen that's telling you statistically we're probably not going to get a trend. Patience. Patience is one of my favorite words I say to my students every time we have class. All right. So, and this is all one-on-one stuff. It really is. Oh, excuse me. That was nasty. That wasn't even a burp. That was just like a burp in my throat. That just was there. Anyway, we finally broke here, right? We got outside of this rangy area. All right. And even if you didn't have this indicator, it's like you still should see all we doing is like ranging. We're not going anywhere. Look at this low. All we did was dance down here at these lows. Some people would call this you got your folks who supply and demand, right? There's tons of supply and demand zones, support and resistance, all of that stuff, y'all. It's all, can you really understand what's happening? I don't care what system and cute little words you use. If you can trade everything. Everything is really the same. It's the same. All right. So we had a classic ranging market, made a new low, made a new high, came right back to the low. That's a range. We're not really doing anything. All right, finally got this breakout here. I'll put this box back. We finally got a little breakout there. All right. Okay, so now we got the breakout. Squeeze right before the breakout went green. It was telling you, yeah, okay, I'm finally getting some gas. I'm feeling better. I'm getting some gas. I think somebody said Noble was a bullfrog. Yeah, that was nasty. That was nasty, but hey, it's a live show. It's a live show. So you're gonna get some nasty in this live show. Anyway, squeeze turns on. Matter of fact, let's do it like this. This is what I do with my students. This is how you really learn how to trade for real. I showed y'all the whole day. Here's what you need to start doing. Or I would say what I'm going to start doing more in these lives is taking you through like the real experience. All right. So right now, this is all you would have saw before that huge candle. Now you know that candle's coming. Right. So then here we have this classic. Okay, we got a breakout. Cool. We're finally clearly, firmly above this choppy area where price was we was battling it out, bulls and bears fighting. Okay, we're higher than that now. So now what? Where's the trade? What do you do? Do you just get in? Do you just jump in because we got a big candle? Was this a report? What made this? What do you do? Where's the trade? What do you do now? I'm on a 5-minute chart. It's the best for intraday time. Best time for intraday, right? If you had to shrink this intraday from 9:30 to 4, if that was your whole world, what's the best time frame? The 15-minute, the 5-minute, the 1 minute, the 30-minute, the 4. Like, what time frame is the best one? All right, decisions. Trust me, 5-minute is the gym. All right, 5-minute is the gym. 15 is too long. 1 is schizophrenic, but I could trade off the 1. I love the 1. I do. I just don't always want to kind of battle with the 1. And as you go down like smaller time frames, you're going to get more fake signals and more losses just because the time frame is smaller. But the beauty is, if you really know how to trade and go to smaller time frames, you can reduce your risk because the candles are smaller. All right. And people are buying above or below a candle. Your stop should be below a certain price. Below some candle or above is where you're going to get in, right? It's like, all right, so the longer the candle, the more the risk. All right. Longer the time frame. But you do need those longer time frames to see things clearly. If I was looking at the 1 minute and the 1 was really crazy, or even the 5, how do you get a better view? You go up a time frame. Go to the 30-minute and look at it. It's the same information. It might just be 10 times cleaner and clearer because there's less candles on the 30 than the 5-minute. Same thing with the day charts and the week. I see everybody on the day chart. I'm like, y'all better start looking at the week. The week is super clear. It's just easier money. It really is. So, had a classic breakout. And here you really can't do nothing. There's nothing you can do but wait for a small pullback. I don't care who you are. I don't care what the trader is. Trust me, there's really nothing you could do right in here. Because jumping a buy at the top of this candle, we could have pulled right back. All right. I've seen those. We get a really big break, we come right back inside the range. That's not the best trade just because you got a big candle. Nope. No, it's patience. All right. It's patience. It's right here. Classic old bull flag. Where's the flag? Oh, here's the flag right here. So you got a big push up. It's like a flag. Right. So my bag out of this for a second. I got a, hands down, a super genius, but proprietary system that took me a long time to really master and even just learn like how to catch the reversals and really go any trend direction at any time. But I mean, even with just basics, we broke over the trend line. All right. So this little blue box represents 10 points on the S&P. That's one contract. Is matter of fact. Oh, hold on. I got to add one more thing. Let me add the daily high low because I want to show y'all what intraday folks should be doing. And if you're a little longer term, that's cool too, right? So up here is the low. That's the daily low. That was the low from the previous day. All right. You got to know where the low from the previous day is. Why? Because look at that. All we did was run directly. Oh, I changed the wrong one. All we did was run directly to it. Right. So if you're in this move, which also is a little 38% retracement here. If you use Fibonacci, once again, we could talk 20 different styles of trading, but this was the move, right? And so from here to here, right, your target should have been this high today because that's a magnet. That's where we're going to. This is what we do every day. That was essentially about 17 points. One contract, that's $850 with futures in like really 30 minutes. Two contracts, 1,700. If you got the balls and the money to do 4 contracts, that's $3,400. All right. That's way more money than 99% of the country makes in 30 minutes. All right. Had a couple more trades in here. I mean, we crossed back under. All right, crossed back under. That was the high of the day. Got another little trend line break. Even on this down move. Right here. All right. I move there. And I can't clearly I can't give it all. I can't. I save the best stuff for my students, but there's a reversal here that worked out. There's another trade here that worked, and then there's actually another reversal here that worked out. Right. So once you get advanced, you should be able to catch these reversals, see these quick downtrends, and right, that's really what trading is. Right, it's being able to see all of those and being able to pull it off. Can you actually execute and do it? The money's there, but this is mastery level. It really is. Why? Because if I put all these boxes, which are essentially I call them Noble Woods trade boxes. I had to come up with a way years ago, just kind of like reviewing my charts really fast, and then I realized, well, shoot, I'm going for the same kind of amount of points generally when I'm trading. So if I know I'm going for 10 or 20 points, depending on volatility, right? Then if I traded perfectly yesterday, this should have been my total. This is actually how much, right? In terms of points of profit, right? That's literally more than the whole day from being able to see trends change direction really fast. It's a different level. It really is a different level. Oh, and volume profile. Let's do that. Let's hit volume profile today. That'd be kind of fun. I'm gonna take all this off my chart. Volume profile today. Oh, gotta go here. Okay, so no, wait, hold on. Change that to today. And let's change this to a 30-minute for a second. I just want to see how it looks. Okay, so this is probably a little cleaner. All right, so this is something called volume profile. What does it do? Do I use it to actually trade? No. Did I used to? Yes. Probably for a solid year, man. Shout out to TD Ameritrades. I don't even know if they still have these dudes. I should check because I'm clearly in my account right now live. You got to have to have the live account clearly, right, to get this. But they used to have these two dudes who were called shadow traders, who were literally trading live every day. Right, you can watch them trade right now. So I learned a lot from watching them, right? Early years, trying to learn this stuff. But volume profile gives you literally a visual profile of volume. It kind of shows you where the most transactions happen, what prices based on the time frame you put in. So what you're looking at right now is a 30-minute chart. Each one of these candles represents 30 minutes, but these bars on the side, that represents volume. All right, so break down a couple terms for you. This top yellow line is what's called the value area high. And the bottom line is called the value area. Oh, thought I was typing. Called the value area low. If you're trading and you've never heard of market profile, a volume profile, go to your studies. You want to add it. Type in volume P. It's gonna pop up volume profile. Pop it on your chart. It's a little tricky because the time frame. If I change this time frame, the volume that I'll see is going to change because I've changed the time frame, right? So you got to be really, really conscious of what time am I assessing? How much do I want to look at? This right here is just today, right? And today is not defined as 9:30 when the market opens. This is futures, so it's actually defined at pretty much at 6 p.m. yesterday because futures will resettle. You could trade futures in the middle of the night. This big move up, this was Europe. All right, this huge move here all morning till our open was Europe, starting at about 3:30, Germany, Frankfurt. All right, Global markets. Global markets, right? Uh-oh. Oh, wait a minute. So inside of these two is called the value area. What that essentially means is 70%. I'm gonna put a note. 70% when you pull up this indicator, 70% of the volume based on the time frame you're looking at is going to be inside. It's going to be inside the value area high and low. And it should make sense, right? This really should kind of help you as you're learning to get better with just understanding what price is actually doing. Once again, under the hood, we only get stuck in places because there's so many bulls and bears buying, fighting, wrestling, and we don't really have a clear winner. Right. So it makes sense that all of the volume came here. And let me do this like this. All right. So these really long, like right here. Oh, and this red line, I'm sorry. This red line is called a point of control. I'll come back to it in a second. But if I just put a box like, I think this is probably the easiest way to understand it. All right, so I put this box here over, and this is me. All right, so you might put yours a little different, but I definitely want to have the point of control where the most not contracts, well, it says volume, so it is contracts. The most contracts were bought at this price. All right, and you can do this on any stock, right? So I'm on futures, but I'm gonna show it to you on stock real quick too. Like, let's pull up Apple today. All right, and matter of fact, let me go to Apple real quick and see what it looks like. I'm gonna come back. That's pretty. It's pretty clean. But I've drawn all this stuff. I don't want to redraw all this stuff now, right? So, in this area, right, if you drag it all the way across to price, it's literally showing you. It's really just showing you what's happening underneath, right? So this is a smaller area. This box I've drawn is inside of the volume of 70%. So this is probably maybe, I don't know, what is that? If we had to do percentages, that's probably what, 30% of the volume over, right, from 6 p.m. when the market resettled to right now. It's 3:26 p.m. Market's about to close in 34 minutes, right? So this little swatch, and as you can see, when you look at price, price got really congested in that area, right? Because you had a lot of people buying and selling, trying to fight it out, trying to figure out which way we're gonna go. And as you can see, we had a really strong move up. Price pushed up all morning. All right. We broke outside of that quote unquote value area high. If I was to draw a line, so take this line and draw it straight across. All right in here, we tested it and then we got above. All right, and we had some volume in here. And what you'll usually see is where these kind of nodes, I don't know what to call them, these bars will get really low. And you gotta almost look at it like this. You gotta look at it kind of like this. It's like a chart sideways. Right? That's really what you're looking at. All right. It's just a distribution, big statistical word. Right? It's just right, the value, value of volume. But you want to look at it at these peaks. And where you have these dips, usually where these dips are, that's where you kind of get the movement. All right. So down here, very low for the day. We didn't have a ton of volume, but down here is where we were bullish. So these are the lows because there wasn't a lot of volume here. All right. It wasn't a ton of volume, but we definitely had more buying than selling. Right. And even here, as we tested and finally got to this value area high, we kind of got out of this little range. Market ranges all the time. If you can't see a range, man, I talk to so many traders, man, who just don't know when to just not trade. Like sometimes you just don't have a trade. It's ranging. Wait, be patient. Like the money's gonna come. And when the trends come, they're so clean. But people try to force it. You can't tell the market. If I said I'm gonna make a $3,000 every day, well, let's say on the ES, just two contracts, 10-point move, just two contracts, which it'll give me that 3 to 10 times a day with this type of volatility, right? That's a lot of opportunity to make money. All right, it's a lot of opportunity to make money. Dang, I lost my train of thought. I was about to go two different places. What was I about to say? That I don't know. It'll come back. Anyway, you want to learn to look at volume in this profile, right, literally you want to draw those same sort of peaks because those peaks are where we get the most volume, the most choppiness, right? And where we have those little dips, it really does connect to the chart. It takes a while to kind of see it, but it connects to the chart because that's where you see markets start to move higher or go lower, right? When we get out of those areas where everybody's now comfortably kind of buying, and then the people who are losing are going to slowly get out, right? So they're not going to fight, right? It doesn't make sense if you were a bear, right? It doesn't make sense to try to fight this trend. It's an uptrend. It's strong. It's clear. Go with the trend until it ends. Right. So that's why you see in these areas where you really get a strong trend, you should see less volume because only one side is really putting money on the table, and it's bulls. Right? You can see who won. Right. And where are we right now? We're back at this value area high. All right. So all day today on the ES, we pretty much were. Look at that. Other than this drop right here at the open, all day today, we spent inside of this value area. Makes perfect sense. Like the perfect chart. Let's do this for fun real quick. Let me go to Apple and then let's go to a different time frame. Let's go to Apple on like the week chart. And let's go back, 2 years real quick? 3 years? Okay, so 3 years. COVID is right here. So right here is COVID. All right, right here is COVID. Actually, it's this whole little drop down here, but all right. So the point of control where the most contracts were bought was way back here. That's where everybody was panicking and buying, right? Panic. Right. So we got above this value area. All in here, we were above the value area. But 70% of that volume in the last 3 years on Apple actually happened, right, from 50 to 140. And so if we get back inside this value area, which just means if the market does not, right, and Apple's a G. The whole market will be down. Apple will still be up. You got to respect Apple. Strongest company in the world. Whole market will be down. Apple's still up. If Apple sneaks back inside and we break this little low, right? We break this. Apple gets under here. Man, the whole market is coming down. If Apple's coming down, everything is already down, right? Because it literally fights off, stuff that just, whole market, like I said, can be down. Apple's still, kind of doing its own thing. So, yeah, so that's market profile, volume profile. I keep calling it market profile. That's volume profile. Hopefully you learn something there. It's one of those, man. You just got to pull it up, and you have to spend time. You just got to spend time. Got to spend the time with it, hours upon hours, to really get what it means. Why? Looking at different scenarios, looking at different stocks, different type of stocks. Right. That's how you take something like this from somebody like me, and then you learn it and push yourself. Right, because only like 5, maybe 10% of learning is like visually watching me audibly visually show it to you. That's literally 15, maybe 20% with like us, these pedagogical models for learning, right? Like what percentage of can you learn? Can you truly learn, right? So with that said, stay tuned. Subscribe to the channel. Stay tuned for the Black Friday special that's coming for my 8-week class. It's a ton of content. You get a lot of this type of teaching, very structured. We spent like literally 40 hours on technicals. I'll show you exactly what I use, so you can have replicatable results. So a lot of folks just popped up out of nowhere, in the last few years and are like, teaching people. But I think you gotta be careful with people that really don't show you what they're doing. Right. Every trader who does this should be pulling up a chart showing you what they're doing. A lot of them don't show you because the stuff they're using is so basic. They don't want you to know that you really don't need them. right? And there is a right once again there is depth and layers to this, right? There's definitely more than just the basics. All the day I did was like basic stuff, trend lines and ranges, and that's a whole class in itself. To really be patient with a range, understand what a true breakout is, and then know when do you actually get in, where do you put your stop loss, right? So, enjoy the journey. Thanks for watching. Oh, let me kick my music back on. Thanks for watching. If you want to sign up for any of my free information, go to limitlessclass.com. Put your email in. I rarely send stuff because I only send stuff when it's important. Right. I'm not the spammer who's sending you something 3-4 times a week trying to get you to buy some class. Nah. Yeah, and make sure you sign up on Facebook. I mean, not Facebook, but let me pull it back up. YouTube. Jeez, I can't even think. On YouTube. Channel's called Being Noble. Instagram is just Being Noble. Facebook is just Noble Woods the third. MBA. And I say the MBA because it cost me some money and some time. So thanks for watching. I will see you next time I do this. 2023, I promise y'all, 2023, I got some stuff coming. We're gonna get this on iTunes. You're gonna have I got a whole rebrand that I'm kind of working on behind the scenes. So this will become a traditional time every week, potentially more than once a week. Because I know when it comes to this stuff, like I pay attention to everything that's out there. And I know I'm teaching and giving you stuff that at a high level, even at a high level, because I really can only do one-on-one type of stuff with the audience, just of mostly newbies. You need quality. You do. You need quality teaching from people with some integrity. So that's about it, man. Don't eat too much on Thanksgiving, although you probably are. Go walk after you eat. Yeah, I can't wait. I'm headed to Vegas to go see my mom. I'm excited. We're gonna cook, watch movies, kick it. You know what I'm saying? So thanks for watching. And as I always say, share this video with somebody that you know and that you love who needs to seriously think about investing or trading. And if you need some help, please reach out. Go to the website. And as always, stay tuned for the Black Friday special because it's gonna be pretty dope. Thanks for watching. Talk to y'all later. Peace.